How you guys doing today? It's yours truly, Robert, and we're going to make an educational video for you guys. Today I want to talk about support and resistance and how it applies to us as price action traders. And it's an important topic that you're going to have to master as a new aspiring Forex trader. So let's go ahead and dive right into it. So support and resistance, okay? Many times you see traders with these horizontal lines all over their screen, okay? And what we use horizontal lines for is marking levels of essentially what we deem to be support or resistance, okay? Now, support and resistance lines are simply levels of price action where we suspect and anticipate price sensitivity, okay? We anticipate reversals to occur, bounces in a bear market, bounces in a bull market, overall trend shifts and changes, things of that nature, okay? Now, it's important that when you first arrive at your charts, one of the first things you're going to want to understand is where are the major support and resistance levels that you are working within right now in the current price action stage of where your chart is, okay? And by marking levels of support and resistance, you have targets to frame trades off of, okay? Now, usually price in bearish markets, most of the time you see price action respecting resistance and breaking support levels, okay? In bullish markets, what you want to look for is you want to look for price to respect support levels and break resistance levels. Now, in sideways movement or basically consolidated ranges, you'll see that price action most of the time works within a support and resistance zone, and it works itself off each level, and that's why it's consolidating, okay? Now, as a price action trader, I personally only deal with horizontal lines of support and resistance, okay? You will never see on my chart a diagonal trend line, and that's because simple price action, okay? Horizontal lines of support and resistance, as you can see here, are 110% correlated with price, okay? And I'm a price action trader. So I obviously will always use horizontal lines because they reference price action over here. Horizontal lines, as you can see, they don't reference price whatsoever, okay? This is a line that you essentially make up, okay? And there's too much, in my opinion, there's too much form fitting with diagonal lines, okay? Everybody is going to have a different diagonal line. And the banks, the funds, the institutional money, they don't use horizontal lines. They don't put them on their screen. Why? Because their trades are based around price, okay? Not some sideways diagonal line. No, their orders that they pair in the market are based off price levels. That's how they operate. They do not use diagonal trend lines. So I have never ever found a need in my trading to ever plot a diagonal trend line. And in my personal opinion, they don't work. They're blown through all the time. Let me see if I can find an area where price does not respect it whatsoever. As you can see, maybe down here, you could say this is a trend line, and you can see what happens is price blows right through it. It doesn't even come back and retouch it. It just keeps going down, okay? And you find this all the time in price action. You'll find that your trend lines are not respected, okay? Now, with horizontal trend lines, they operate much differently because they're referenced to price levels, okay? Now, every swing that you see in the market here, okay, each swing, and let me define a swing for you guys, okay? Every low formation that you see on here or high formation, these turning points, these are what we call swing highs and swing lows. In my description and the way it was taught to me by one of my mentors, Michael Huddleston, ICT, is that a swing high is a candle okay, that has two lower candles on each side of it. So right here, you have a swing high. You have the high of this candle and a lower high and a lower high next to it. Okay, that constitutes a swing. Now, as the price action, as the indicator, there's an indicator that you guys can use. Let me go ahead and show you guys the indicator real quick. The indicator is the Bill Williams fractal indicator. And this will denote swing highs and swing lows in the market. However, the requirement for a swing high or swing low to be a requirement is that it's a 5-candle formation. My concept in the way I frame my swing highs and swing lows are off of 3-candle formations. The Bill Williams fractal indicator that's installed in MT4 requires 2 lower candles on each side of the up or down candle to constitute it as a swing point, okay? And that's not how I operate, okay? I only require 3 candles, okay? So every swing point that you see in the market, okay, is based off of a price level, okay? Not necessarily a diagonal trend line. Even if it appears so, it's not, okay? And people will tend to form fit their diagonal trend lines so it appears like the swing points match up, when in all reality, it has nothing to do with it, okay? The banks don't deal with diagonal trend lines. They deal with horizontal trend lines. So let's go ahead and go over how do we plot trend lines on the chart, okay? Now, if I'm analyzing a pair, okay, for right now what we have is we're looking at the dollar chart, okay, the US dollar. I always start on major time frames, okay? I'm an intraday day trader, okay, and what that means is my execution usually occurs on a 5-minute chart to a 15-minute chart. Now, when I plot my trend lines and when I do my overall analysis, I always start on the largest time frames and I work my way down, okay? Now, essentially what I want to do when marking my support and resistance zones, okay, and I'm just going to do it on a daily for now, on this, just to show you guys how it is that I plot these zones, okay? When I see a major turning point in the market, okay, a major swing point, I'm going to go ahead and mark it with a line. So as you can see, right up here, we have a swing point, okay? And let me actually zoom out just a little bit so you can see it a little bit better, okay? Right up here, we have a level that I'm going to go ahead and mark, okay? Now, the high of this candle right here, these two candles, the high of this candle comes in at 100.55, okay? And this one comes in at 100.53, okay? Now, I'm going to go ahead and form fit this line to a round number. So I'm going to come to my properties, and I'm just going to make it 100.50, okay? That's personally what I do. Now, before I get going, let me tell you why I did that, guys. The institutions, the banks, they love round numbers. They love them. They absolutely love the 50 level, which we call the mid-figure, the 20 level, the 80 level, and then the big figure, which are just 100 level, 90 level, 96 level, 97, 98, right? When you get to 98.50, 98.80, 98.20, those are also institutional price levels that you will most of the time see reactions off of. So if I'm plotting my horizontal line, okay, near a swing point that's very close to an institutional level, I'm going to go ahead and just adjust it to that exact institutional level, okay? Now, we also have some clean highs right here, a resistance level that we see price trade up to twice. So I'm going to go ahead and mark that. And this is very close to the 99.80 level, as you can see. So I'm going to go ahead and just kind of form fit that 99.80, okay? You can kind of see that right there. We see another swing point right here. I'm going to go ahead and mark this level right here. Again, this is 98.57. If I want, I can go down to 98.50. That's a good level to have on your screen. Okay. And you can see that based on these levels, look at how many touches we have right here. This 98.50 level, the mid-figure institutional level, look at how many times, like right here, price trades down, this candle closes, or sorry, the low of this candle is 98.49.5. So basically, you know, half a pip away from 98.50, okay? And we see many times later on price trades down here, we get it up here as well, okay? So that's how I start. Now, do I need to have these levels up here? No, because price isn't near them. So I'm going to go and delete them. I only want levels that are near current price action over here. So I'm going to go ahead and delete all these previous levels because I don't want to clutter my screen. So I'm going to zoom in and mark the levels that are near my current price. So we have one swing point here. Okay. Now, I'm not going to form fit this one because it's a little far away from that. It's a few pips far away from the institutional level. So I'm just going to let this one be, and I'm okay with that because we have multiple touches on this level. You can see how price has respected this level a few times in the past. Right here, we get a nice bounce up. Okay, it trades around the level, bounces up, doesn't quite get there, comes away. We break it here, we trade right up onto it, and then we come down. And you know what? Actually, let's see if we can actually make this a little bit better. What if we get down to 97.50? 97.50 is right about there. So this one, I'm actually going to change it because I think 97.50 is a little bit better, and I'm going to tell you why. When you make 97.50 the level here, you can see that in the past, we have much cleaner reactions off the 97.50 level here. Okay, candles go right up to it, trade away, right up to it, trade away before breaking it, right up to it, we trade away. And same thing here, right up to it. We go through it just a little bit, but then we trade down. So, in my opinion, I like the 97.50 level. Okay, it's also an institutional level that you can expect reactions off of. Okay, now I'm also going to mark this level right here, the swing high. I'm going to go ahead and mark that as well. And this one is basically 90, the high of this candle comes in at 95.95. Okay, that's where I'm going to want this guy to be, 95.95. Let's see what we got here. How does this look? Okay, 95.95 is a good level. It's very close. It's 5 pips away from the round 96 figure, which is a good institutional level. Then you can see we have some reactions off of here. Price trades down to it here, trades up. Okay. Price trades up to it here, right to the pip, comes off of it. And in the past, we see reactions off of this level as well. Before we break it here, trade back up, test it, and what you can probably expect is price to trade away from this level to the downside. Okay. Now I'm also going to go ahead and mark this next turning point here. This is a swing low. And this is very close to the 95 big figure, okay? And you can see again on this one, if I go ahead and actually change this to 95 big figure, good grief. Okay, 95 big figure, just 95.0. We hit OK. It's a much smoother looking resistance level. See that? We have some nice rejections here. Nice, rejections here, okay? Now, as you're looking at support and resistance here, okay, this line right here, as it sits right now, in this instance, acted as resistance, okay? This line right here, in this area, okay, the 95.95 level, acted as support, okay? Now, when price breaks resistance or when price breaks support, okay, that level turns into the opposite, essentially. So what do I mean by that? Well, right here, you can see that the 95 level acted as support to this down move right here. Price traded through it just a little bit, and then came up, and then it eventually broke it, and then it acted as resistance. Price was unable to get above it until over here, and then it acted again as support. Okay, so it's important that you understand what major, larger time frame support and resistance levels you are operating within. Okay, and there's one more level that I can go ahead and plot, kind of longer term. It's going to be this swing point right here. Okay, now the reason why I'm going to use this swing point down here, this 93.37 area, let's see, the low is 93.40. What's this low come in at? This one actually we may be able to use, because this is right at 9,300. Okay, this was a good level to have. Okay, the reason why I'm going to plot this on here, okay, is because, as you can see, when price usually breaks support, okay, it's going to fall to the next support level. Okay, it will end up getting down there. So if we most likely see that price action is going to break the 95 level, then long term it may be seeking this 93 level, okay? And maybe even shorter term, the 94 level, because you see some price action here with these swing lows over here, okay? You may see some short-term objectives being found down here for the dollar to head down to, trade down to, the 94 level. Okay, so you could have that on your screen as well if you want to just go ahead and put 94.0. Okay, that would be a good level to have. Okay, now these are all levels that are near our current price action. Okay, now if you move into the lower time frames, you're going to see price action respect these lines a lot more clearly. Okay. A lot of times you see price action bouncing right off of these lines, coming back through, okay, you see it just a little bit more clearly. And even going into a 1 hour chart, you can see how these lines make a lot more sense to the price action here, okay? Price respects them, okay, even when we go back into the past here. You can see how price, there's a lot of bounces and touches on these levels here, okay? Now, all these levels were derived off the daily chart, okay? The daily time frame is going to be one of your most powerful time frames that you analyze your chart on, because it's the most commonly used chart by the banks and the institutions, okay? So, what you want to go ahead and look for is, in a down market, okay, what we see right here. We see a down market, right? Well, in a down market, what you want to look for is support to be broken and resistance to be respected, okay? And we see that here, okay? You see a lot of times price action breaking support levels and resistance being respected, okay? Now, in a bull market, you want to see the opposite. You want to be support levels to be held and resistance levels to be broke. Okay? That's how you understand if a particular level is going to hold or not. You first have to come to the premise of what kind of market are we trading within right now? Are we in a bear market or are we in a bull market? And once you come to that premise, you can have an idea on whether or not a certain level will be respected, okay? And you can see that this is a down move right here. From this point forward, the swing high to this swing low, this is a down move. And what we have occurring right here is simply a bullish bounce in a down move. And each time we come up to a major institutional level, you see a bounce. You see resistance respected, okay, right here. You have resistance respected, trades down. Eventually it comes up through this resistance level, but then it respects the next one right here. And then it trades down. All right, you can see that. And you're starting to see it right now unfold in the dollar. if we zoom in, okay, we broke this support level. Now price traded up to it, but was unable for the day. Okay, this was what date was this? This was the 11th. Okay, at the time of this recording, this was August 11th. Price was unable to trade above it. It respected it. Okay, and then on the next open, we trade right up to it, and then we trade away from it. And where price currently sits is at the 95.66 level. Okay. Now, as far as objectives go, we can expect this to trade down to most likely the 95 level. Okay. So in the next few days, when the market's open on Sunday and Monday, what I'm going to expect is the dollar to trade downward, okay, toward this level. I'm expecting a bearish outlook for the early part of next week, maybe busting on 95 level and then continue trading down to the 94 level and even maybe down to the 93 level, okay, in that direction. So as far as outlook goes for next week, I'm expecting bearish activity to unfold in the dollar, okay? So this is support and resistance 101. How do you plot them? Now, the way that I plot my support and resistance levels is very simple. As you can see, I find turning points in the market and I mark them. Okay? A lot of traders, they say, oh, you have to go to the body of the candle or the top of the wick. Not necessarily. You don't. Okay? What I simply look for is I like to mark the absolute turning point. So the highest part is what I'd like to start at. Okay? However, if there's an institutional level nearby, I'm just going to use that, okay? Like the 97.50 level, the mid figure, okay? I'm going to use that. Over here, we have the 95.95 level, okay? I like that. That's close enough to the 96 big figure for me to where I don't need to move it up an extra 5 pips. To me, that's close enough because I see a lot of touches on this level right here. Okay, now these levels on a daily chart represent some higher likelihood of seeing turning points. Okay, because these are support and resistance lines based on the daily chart, your likelihood of seeing price sensitivity to occur around these levels is very great. Okay, we're just going to look at this area right here, and I'm going to show you how powerful these levels actually are. Even right here, we'll actually start from here and move all the way forward. So back to about June 25th area, all the way forward. Okay, I'm going to highlight it, and we're going to go ahead and take a peek at what we have there. Let's see if I can insert what I'm trying to insert here. Let's see here. Just bear with me, guys, as I try to figure out exactly how I'm going to do this. Good grief. Let's see. If I move this down, there we go. That'll work. Insert. Let's do rectangle, and we're going to showcase this entire area right here of price action. Okay, and now we're going to zoom in on a smaller time frame. Okay, let's go into a 1 hour time frame. Okay, and we're going to go ahead and just take a peek at what we have occurring off of these levels. Okay, so as you can see, all around this area, we see many bounces off this level. Okay, when price breaks it, we trade up to it, pulls away. Okay, price trades down to it. As we broke up above it, we trade down to it, pulls away. We break it. Okay, let me zoom in a little bit more. We break it to the downside here. We trade up to it. We test the line again. It acts as resistance, and we trade away. This little tiny move right here, guys, that's a 50, 45 pip move right there. Okay, we trade back up to it here, and then we trade down away from it to this low. What's the range here? from the line all the way down, the 58 pips, right? And then we keep looking this way, okay? We break through it here. We end up coming back down to kind of test it here. We violently trade away. What do we see here? That's 40 pips. We stab through it here. We violently trade upward. Same thing here. We trade down to it, a little bit through it. But if you were anticipating a reversal and you bought off the level, okay, if for whatever reason your directional premise at this time was for bullish activity, okay, you could have bought here and you would have made 37 pips within an hour, you know, upward. All right, we trade down to it, and then we have a major bounce here, 78 pip one. Okay, this level up here, we trade up to it. It doesn't stay up here long before coming away. Same thing here. This candle pulls right up to it, trades away. We break through it here. We come close to it, not as close as I'd really like. Probably not close enough for you to really get in a trade since it's 13 pips away, but you know, nonetheless, trades down to support. And once it gets to support, we see this move. We trade back up. Okay, and this is what I was talking about, guys, a consolidation here. And then we end up breaking out of it. And then we trade back into it. We trade up, test, comes right up to the pip, we trade away. See how that works? 30-minute time frame. Same thing. We see it even more clear. These levels work very, very well. So a good thing to start doing is going onto a daily chart and marking major daily support and resistance levels that are near your current price action here, okay? And the way you do that is you look for market swing points, okay, turning points in the market where you see a change in direction, okay? And you start by looking, you have to look in the past for this, guys. You have to look at past price action, okay? These levels were significant in the past, which means there's a very likelihood of them being significant again in the future. Okay, as you can see, these levels have been traded off of quite a bit in the past, and they're still to this day being traded off of in the present. And then in the future, you can probably expect the same thing. So to wrap up the video here, I want to kind of summarize some of the things that we went over. Okay, we went over plotting support and resistance lines on a daily chart. Okay, how does support and resistance relate to us as price action traders? Well, they mark and denote turning points in the market where you can expect a bounce in price or a reaction of some sort, some sensitivity. Okay, now this is not the only thing that you need to consider when you are a price action trader and you're an evolving trader. This is just one tool that you use to have confidence in executing a trade in the marketplace. Okay, this is something that we all start out doing, plotting support and resistance levels. Okay, but support and resistance alone gives us nothing. It gives us nothing. Okay, and it looks like, you know, if we look at the future, that yeah, we could have traded a lot just off these levels alone with no other knowledge. Okay, price comes down here to a support level, let's buy it, and then it goes up. Okay, well, it's not that easy. Okay, these levels alone, they do nothing. Okay, you need other concepts, but you need to start with the basics. Okay, support and resistance is just a precursor to some of the things that I'm going to be releasing in the future. You have to understand basic support and resistance plotting and having a base understanding of price levels and their influence on price action. Okay, now we know that the marketplace here, these swing points, they're not random swing points, as you can see. They swing off of very precise round numbers. Okay, you don't see a whole lot of random swings. This level right here that I'm plotting, very close to the 98.50 level, the mid-figure. Now the exact high comes in at 98.58. You don't see 98.58.8. It's a round number, okay? The markets aren't random. These are all organized moves. Everything you see on the market here is organized by the market makers, the people with all the money, the funds. This level up here, very near the 150 level. Okay, the exact high here comes in at 155. Okay, which is 5 pips above the mid figure. Now you have to take into the spread into account on that. You have a 7 pip spread here. Okay, so also factor that in. So this is a very good level, the 150 mid figure level that we have a reaction off of. Okay, now this understanding alone that price respects these institutional levels is one of the reasons why I do not need and find any desire or significance in plotting diagonal trend lines, because there's no price reference to it whatsoever. They just don't work. Okay, you know, if we go to a euro chart, you know, we go out to like a 4-hour, right? Where are you gonna plot a diagonal line on here? Like where? How do you make one fit? What are you going to do? You're going to do one of these, you know? That doesn't do anything. Like, where is it going to fit? I don't even think you could really make one that looks good. I learned all of this stuff, you know, right here. Maybe this one, right? You'd form fit this, right? But what happens here? Price here didn't trade down to it. You get a couple touches here. But what about this random wick that went right through it? How much of a drawdown is that? That's a 30 pip deficit there. If you took a trade off of this level, you went 30 pips down before it came off of it, right? And I'll tell you guys, this move right here, this was organized. This wick right here that you see, this is an organized wick. And this is something that you're going to learn later in my teachings if you follow me, okay? If trend lines truly were what the banks were looking at, they wouldn't have wicked down like this. This big bullish candle would not have went this far through this trend line if, in fact, trend lines, diagonals like this, were accurate by any means, and if the banks used them. I'm telling you, if the banks used trend lines like this, you would not have seen price trade 30 pips down from this diagonal trend line here. No, because they don't have this drawn. They don't have it. They have institutional levels drawn. Like this level right here. What do we have? Right here. 109.50 area. Okay, right there. 109.50. Institutional level. Right? Mid-figure. That's what they have on their screens, guys. They don't use diagonal trend lines. So, we're going to wrap up the video. This is a little intro into support and resistance and how it applies to us as price action traders, okay, and why we plot these levels. Because it gives us an insight of where we may see price sensitivity. But we need to pair that with other concepts to frame a trade off of. That's important. You can't just frame a trade off a simple support and resistance level. You need to have the other more advanced concepts of how the markets operate in view, okay, to frame a trade off of one of these levels, because you need to understand if a level will be respected or not, okay, and that's something that trips up people quite a bit, okay. One of the downsides that we know, okay, and a lot of regular neophyte, what one of my mentors calls neophyte traders that learn all the textbook material, is that, you know, eventually as a support and resistance trader, supply and demand trader, you end up being negative and you end up having a net losing streak because of fake outs, okay? And it's because of fake outs, right? The worst thing you could do, I'm going to zoom in and show you guys an example. Right here. Price bounced away from this 95 level, okay? It actually came down to around the 95.20 level, which again is an institutional level. The 20s, the 80s, 50s, and the big figures, right? But if you had this on here, okay, price continued deeper before trading away from this level, okay? If you were to buy here, you would have suffered a 68 pip drawdown. And that may scare people, and you may have closed your trade prematurely, and then you would have missed out on this entire rally upward of 2,500 pips, okay, that lasted for many days, okay, a few weeks. You would have missed out on all of that, okay? So you have to understand that this alone, you cannot frame a trade off of it. It will help you frame a trade, okay? But it will not do everything for you, okay? You can't just trade off these levels and say, okay, price is coming up to a suspected resistance level, let me sell. No, it doesn't work that way because of fake outs like this, okay? You see right here, we do dip above it a little bit, okay? And then some people, some neophyte traders would have saw it break this level. They would have bought it, and then they would have been dragged down because they saw this false break right here. Okay, that's what we call a false break. And even over here, we see it over here. Okay, this area, it did respect it. It just broke through it a little bit, and there's a reason why it dipped through it, which we will get to later on in my educational series. That's why you can't just rely on this level alone. Okay, let me show you guys. Let's go ahead and insert the rectangle on this area, and we'll zoom into this area on the chart. Go back in the past. Come on. Bear with me, guys. I'm trying to figure out where this thing is. Maybe I'm skipping right over it because I can't see the color. What are we doing? Come on. Where did I put that level? It's way back here. Okay, so let's go ahead and I want to zoom in over here. Good grief. This is going to be difficult. Scroll. Alright, you know what? I can't figure it out. So what I'm going to do is simply zoom in, and I'll just show you on the daily chart, okay? If you would have bought here off this level, you would have suffered about a 30 pip drawdown off this level, which to some people is a good amount, you know. You could have very well closed your trade there, okay? And then you would have missed out on all this. And for the traders that are breakout strategists, okay, playing the breakout strategy, they would have saw this support level be broken by this daily candle. They would have waited for it to come up and retest, and then they would have sold it. But when it retested, it kept going through it. It re-broke it to the upside. And then when you would have sold on the retest, the candle would have dragged you 40 pips into a drawdown, 45 pips into a drawdown. And then you probably would have closed out your trade. And then we went on. So this is the frustration with support and resistance, okay, is that you don't know for certain if a level is going to hold or not. And that's mainly because people don't have the higher time frame understanding, okay, and they don't have the overall directional premise of what is going on in the marketplace to see that we're still in an upward move here. Price action has not reversed, you know, and we're going to get to all that in later teachings, okay? But right here, I would not have become a seller because price did not trade down and break this previous swing low here, indicating this is still could be a higher low, and we are still maintaining a bullish outlook. This was a simple bearish bounce in a bull market, and we're retracing into a previous range from this low to this high, and that's what we ended up doing. But the breakout strategists, the neophyte traders, there were people who would have sold here because they saw a daily candle break a major support level. They would have saw it, they would have sold it, and they would have been held in the wrong direction, and they would have lost out. So, with that being said, that's our educational series, okay? I just wanted to show you guys support and resistance, how I think of support and resistance, how I draw my levels, okay? How I frame, how I start to frame trades based on these concepts and ideas. The levels that I like to see, the institutional levels. We talked a little bit about how the banks and the smart money, how they see the market in terms of support and resistance. And, I wanted to mention and kind of, disprove the belief that you need to have all of these diagonal trend lines on your screen, all right? Because they simply just do not hold, and there's no significance to them whatsoever. And I think I made it very clear in the video that there's no significance to having diagonal trend lines on your screen because the banks don't care about it. And I showed you that by the wicks down, okay? If the banks really were using these, they wouldn't wick 30 pips through it. There's a reason that they did that, and it's not because it has nothing to do with that level actually being there because they don't see it. They don't draw them, okay? They use horizontal levels because horizontal levels are price-based. And the market makers pair their orders off of price levels, certain price levels, okay? Price levels that make sense to them. Round numbers. You'll see it all through the screen, okay? If you don't believe me, go to your euro, go to any chart, figure out major levels that price is trading within, and just mark the 80 level, 20 level, 50 level, and the round level, okay? And look at the reactions that you see. And then fine-tune it to the actual swing points. But most of the time, you'll see that these swing points are very close to these big figures. This one right here, very close to 111. Okay, we're 4 pips away from it. Okay, and trust me, it's there in the charts, guys. It's there. This one right up here, very close to the 20 level. We're 3 pips away from the 20 level. Okay, so it's all right there in front of your eyes. You just have to spend time with the chart and studying where do these swings occur? What levels do they occur at? Okay, what prices do they occur at? That's what you need to start understanding is the price levels. Because these levels over here are what the banks operate off of and what their orders are paired off of. Okay, levels, price levels. Okay, so I hope this video offered some insight to you guys. I hope it helped you guys out. A very basic intro to support and resistance and how we use it as price action traders. Okay, so if you guys have any further questions about support and resistance, you can feel free to email me, PM me, Facebook me. All my social media is out there. Anybody that really views this video is a follower of mine. So feel free to go ahead and shoot me a message if you have any questions about support and resistance. Okay. So with that being said, I'm going to go ahead and sign off, and I wish you guys happy trading. Good night.